Hi everyone, this is Dr. Nitin Chhoda with Ignition Time and welcome to my channel. In this video, I'm going to talk to you about the impact of an extended election on the stock market. Now, I've done a lot of videos on my channel talking about stimulus news, unemployment benefits, but my main focus in the coming weeks, in the coming months, in the coming years is going to be financial freedom for my community. I want my community to live the American dream just as I have the fortune and the honor, the privilege to do. If you don't know anything about me, please check out my video. You'll learn more about who I am, what my journey has been like, and why you should listen to me. Now, the political chaos and the prolonged uncertainty that is likely after the election, I'm not saying it's going to happen because no one knows what's going to happen, but Bloomberg News just reported that if there's going to be political chaos and prolonged uncertainty about the results of the election because counting of mail-in ballots could take time, that could lead to potentially not a peaceful transition to the next president, whoever the next president is. That could lead to a contested election, that could lead to disputes, which are going to cause a lot of uncertainty and a lot of volatility in the stock market. I want to quickly talk to my viewers and subscribers about the concept of volatility. I don't know how many of my viewers and subscribers are familiar with options trading, but I do options trading. And the way options trading works is when you buy or sell an option, there's something called a probability OTM, which essentially means the probability of that option being out of the money. So usually a probability OTM of over 90% indicates that that option is likely to essentially expire out of the money on the date of the expiration. So I don't want to get too technical, but essentially there are real-time adjustments in numbers of stock prices, of options prices based on projected volatility. Well, I have news for my viewers and subscribers. If you take a look at this article on your screen from Bloomberg, the article says, "Complete mess. Traders fear volatility long after election day." In fact, the volatility is already rising. This is called implied volatility. This is the market expecting problems to happen. Implied volatility is already rising for equities, meaning stocks. It's actually rising for currencies. It's rising for gold as well. And UBS sees a complete mess for markets if the results are delayed. Now, if President Trump wins re-election and if the decision comes in that night, then that essentially means there'll be less volatility. If Joe Biden defeats President Trump and becomes the next president of the United States, but it happens the night of the election, then that also means that there is no further volatility. In fact, the decision about who becomes the next president is less likely, this is important, is less likely to cause volatility than a protracted period where we do not have a result. In other words, if there is political chaos and a prolonged deliberation while the mail-in ballots are being counted, while certain results are being contested, that is going to cause more uncertainty, more turmoil, potentially more of a decline to the stock market. Now, in case you're wondering, what does all of this have to do with me? If the stock market declines, a lot of individuals, 401ks, take a hit. If the stock market declines, a lot of us who have money in stocks lose money. If the stock market declines, the economy, essentially, politicians could now look at the declining stock market and say, oh my God, now is a need for more stimulus. The one thing I want my viewers and subscribers to understand is in the world of finance, and in the economy, everything is interrelated. If the stock market collapses, then you're likely to see more funding, more loans, you're likely to see more stimulus. On the other hand, if the stock market continues to go up, then the chances of stimulus actually go down because there are certain factors that affect stimulus. These include the state of the economy, the state of jobs, the state of the stock market, and political calculations, which I have covered in other videos. In other words, who controls the House, who controls the Senate. So let's get back to this Bloomberg article. And the Bloomberg article says that volatility markets from stocks to currencies and bonds show investors bracing for turbulence, not just on election day, but for the ensuing weeks as well. The fear is that the results from the November 3rd vote, already the most expensive event to hedge against ever because there's some betting going on related to the event, options trading, all sorts of bets are going on. And this says that it won't be, if it's not clear enough that a winner emerges without a protracted legal battle. That's what the markets are predicting right now, that the results may not come in the night of November 3rd. There could be an extended vacation. I have done another video where I've talked about election day potentially turning into election week. I hope that doesn't happen, but there are already rumblings about something like that happening, especially if it is a close and contested election. If this does indeed happen, if it becomes a protracted legal battle, we could be looking at a significant degree of chaos, ups and downs in the stock market. And that is why the implied volatility, in other words, it's a numerical predictor of variations, of fluctuations, essentially a lack of stability, is already increasing, because this is what the markets are predicting. And if that indeed happens, I'm talking about a protracted legal battle, the potential for political chaos and the prolonged uncertainty could be a bigger factor that pushes down stocks, could be a bigger deterrent to high stock prices. It's a bigger risk for equity markets than who actually wins the vote, according to UBS. This was mentioned in the Bloomberg article. According to Stuart Kaiser, who's the head of UBS of derivatives research, he said the election outcome itself, once you know it, that would have meaningful but not an oversized impact on the stock market. What is being said here by this group is that regardless of who wins the election, the fact that we get a result decisively and quickly is important for the stock market and potentially by extension to the rest of the economy, because none of us want a period of extended turmoil. We want a free and fair election, and we want it to be quick, and we want a decision to come in. And so Stuart continued, but the prospect of it becoming a complete mess is another element that people don't really know how to price. So that is where things stand right now. And as a direct result, we're seeing a higher level of implied volatility across the board. And I do want to be clear, a potential increase in mail-in voting could delay ballot counting, because if there are a lot of mail-in votes, they might not all be counted on that day. Let's hope they are. And let's hope, we get a decision, we have accurate counting on that day. But if that does indeed happen, again, we're looking at an impact on the stock market. Now, it's not all doom and gloom, though. Goldman Sachs has said today that a delayed outcome is, I quote, only a tail risk. In other words, they don't see it as being a significant risk and not the most likely outcome. So we can take some solace in that. But, no one can predict the future. There's one thing 2020 has taught us. We have no idea what's going to come next. And we can do our best to brace ourselves, which, by the way, is what this channel is about. I'm not going to give you false hope. I'm just going to give it to you straight, because I know you can handle it. And trust me, I want to, and I will soon be talking about sunshine and rainbows. I'll have a glass of wine out here and I'll be talking to you, and I'll be, giving you guys information to help you get to the next level financially, where you check out my channel after a long day at work, and, you have some savings and you're trying to figure out what to do with it. That is my goal and that is my vision for our community, and we'll get there. But right now, the times that we live in, we need to know what lies ahead. So what's happening is that, again, Goldman Sachs said that a delayed outcome is only a tail risk, but markets have even more to worry about right before the vote, because, and this is something big that no one is really covering, the Federal Reserve will meet the week of the election for the first time since 1984. The Federal Reserve is actually going to meet the week of the election, because the October's jobs report will be released that Friday. Now, let me be clear. I don't think that the October jobs report is going to play a role in, how we vote the week of the election. But the fact that the Federal Reserve will meet and probably make some decisions there, presumably to extend presumably just to keep things where they are, because I don't expect the Federal Reserve to make any big changes on the week of the election. But that is another factor that the financial markets are looking at. I do want my viewers and subscribers to be aware about this. Let me know what you thought of this video in the comment section below. If you learned something new, please share this video with friends and family. My advice to my viewers and subscribers would be, please, if you can, keep your powder dry. Have cash. I would say have cash for the next 12 to 24 months, because there will be opportunities that emerge and I will guide you through those opportunities. I want you to conserve cash. I want you to have a buffer. I want you to have peace of mind as we get through this rocky period, as we emerge from this recession, as we get the election behind us, and then I'll guide you to achieve financial freedom and to get to the next level. This is not the time to be day trading. This isn't even the time to be investing in the stock market. I've been in a cash position for a while because I'm waiting for the right opportunity. In fact, I've already started nibbling at some things. So my advice to my community, to our community, would be please try and have some savings, have some cash. Don't even think about the stock market right now. Let's get all the volatility behind us, and then let's identify attractive stocks that are high value, stocks that are well priced, stocks that we understand, and then that would be the time to start investing. For me, I actually continue to buy real estate through this crisis. I've continued buying a significant amount of real estate because interest rates are so low right now. And so that is a strategy that sort of carries on regardless of the implied volatility in the stock market. But I did want to point this out because there's a connection between stimulus and the state of the stock market and the election. Because if one side wins the election, the chances of stimulus increase or decrease depending on who wins. If there is a protracted legal battle, if there is a prolonged period where the election is undecided, that in turn has an impact on the stock market, which in turn will have an impact on stimulus. That is where things stand. That's it, everybody. Thank you so much for your time. My name is Dr. Nitin Chhoda with Ignition Time. If you don't know anything about me, please check out my introductory video. You learn who I am, what my journey has been like, and why you should listen to me. We release videos at 2 p.m. East Coast time most days of the week. You can get on our SMS list. Just get your cell phone out and type out the text message ignition or time in the body of the text message and send that to 70,000. That's 70000. And you can get added to SMS alerts list. You can opt out of the SMS alerts at any time. You can also, if you want, get on our email list. Go to ignitiontime.com/alerts. That's ignitiontime.com/alerts. You'll get added to our email list and you can opt out of the emails at any point in time that you want. You can also bookmark our channel at youtube.com/ignition time. That's youtube.com/ignition time. This way you can visit our homepage and watch our videos anytime you want. You're not dependent on YouTube notifications because sometimes they don't go out on time. So you can follow us on Instagram. Our Instagram handle is ignition_time. So make sure to follow us on Instagram because we release fun, engaging content specifically for our Instagram followers. You can also follow us on Twitter. Our Twitter handle is also ignition_time. We release breaking news alerts on Twitter. Definitely follow us on Twitter. You'll get a lot out of it. Once again, we release videos at 2 p.m. East Coast time most days of the week. Thank you so much for watching. Please click like, please subscribe because that is your vote of confidence in us. That is your validation of all the efforts that we put in for you. It really helps out the YouTube algorithm as well. And I personally would really appreciate it because we work hard on this channel to bring you honest, important news that's important for your long-term financial future. There's no hype. There's no misleading with our content. We obviously have to make our content interesting and engaging so that you click on it. But our goal is to provide you with actual news, and I know you see that. That's why our community has been growing so rapidly. Thank you so much. I'm looking forward to seeing you in the next episode of Ignition Time. Thanks. Bye.